Sup guys, your boy Quick Stocks is back, and today we're going to take a look at the juggernaut, Facebook. Up nearly 5% as of today, March 24th, 2020, trading for $154 a share, down 30% from its highs with a PE of 24, which, historically speaking, is actually a great deal for Facebook. So, is Facebook a buy at these levels? Well, we'll take an in-depth look at the company, but for people looking for a quick analysis, well, we are living in uncertain economic times, but the idea we can buy into a company like Facebook with a 40% expected growth rate in 2020 and a 20% plus growth rate in 2021, it sure makes for an appealing case for Facebook. So let's take a look into the company. Facebook's revenue for Q4 came in at $21 million, and a whopping $20 million of this was from advertising. So in other words, in Facebook's most recent quarter, ad sales represented 95% of the company's revenue. Even more staggering, for the full year of 2019, Facebook generated $7 million in revenue, and $69 million of it came from ad sales, which represents 98% of Facebook's revenue. And just to put this into perspective, Facebook's sales increased 27% in 2019, which shouldn't be understated for such a massive company. Next, I would like to take a look at how Facebook has performed against some of our favorite benchmarks in the last 5-year period. So let's start with the big boy, the Dow Jones. As we can see here, even with the most recent correction, Facebook has seen an 83% rate of return in the last 5 years, where the Dow Jones has seen a much less impressive 8% return in the same time period. And of course, let's take a look at how Facebook has performed against the Nasdaq Composite. As you can see, Facebook has well outperformed the Nasdaq Composite as well. Facebook versus Ford. Not even a comparison. Facebook versus Google. It makes sense that Facebook and Google closely mimic one another, which should be expected as both receive a majority of their business from online advertisements. And as of making this video, Google has seen a slightly better 5-year return. Facebook versus Walt Disney. Sorry, Mickey, you've been Zuckerberged. And of course, Facebook versus our boy Tesla. Well, it looks like not even Facebook could stack up against Tesla after its most recent run-up. While we're at it, I'd like to quickly take a look at how much an investor would have made if they invested into Facebook 10 years ago. So if we had a participant that we will call Facebook Bobby. If Facebook Bobby invested $10,000 into Facebook, which has seen an average of 16% rate of return yearly, our boy, Facebook Bobby, would have $44,000. Now, I would like to take a look at the companies inside of Facebook's umbrella. So Instagram, with its 500 million daily active users, which, interesting fact, was acquired for only $1 billion in 2012, which is currently valued at $100 billion, which is estimated to generate around $8 billion in revenue per year. WhatsApp, which is a messaging and calling service that has around 1 billion daily active users with a yearly revenue expected to be around $5 billion in 2020. Just to put this into perspective, 78% of Facebook's active users log into its services on a daily basis. And of course, Facebook owns numerous other companies, but as of right now, Facebook, Instagram, WhatsApp should be considered Facebook's flagship companies. However, I'd also like to cover Oculus VR, which specializes in virtual reality hardware and software products, which really could end up being a hidden gem for Facebook. With so much of the world being quarantined, the idea of virtual festivals, house showings, museums, concerts, meeting up with friends online, and so on, really does put Oculus in an interesting position. So, what's the word? Well, in my opinion, after the most recent corrections, Facebook is a buy and hold for years to come. With more and more of our world taking place online, it only makes sense to want to be a part of it with one of the largest players. Anyways, I hope you guys enjoyed the video. This was Quick Stocks. Be sure to like the video and subscribe. I'll catch you tomorrow in the next one. Take care.